In 2025, 91% of retail futures traders lost money. Not because they didn't try, not because markets were rigged, because of three emotions they couldn't control: fear, greed, ego. Every financial disaster in history traces back to one of these three. Let's look at each one. Part 1. Fear. Fear in finance operates in two ways, and both destroy wealth. The first is obvious. Panic selling. Markets drop. Fear takes over. You sell at exactly the wrong moment, locking in losses that would have recovered on their own. The second is quieter and more expensive. Fear of starting. Fear of being wrong. Fear of losing. So people keep everything in a savings account, earning almost nothing. The feeling of safety and the reality of safety are not the same thing. Inflation is silently eroding your purchasing power, while fear keeps your money still. The antidote to financial fear isn't bravery. It's a written plan made before the fear arrives. Automate your investments. Decide your strategy when you're calm. Then when fear shows up, your system runs anyway. Part 2. Greed. If fear stops people starting, greed destroys people once they've started. Greed is not wanting more money. Everyone wants more money. Greed is believing you can get dramatically more than the market offers and taking on far too much risk to chase it. FOMO, fear of missing out, is greed in disguise. In 2025, this played out across crypto markets and meme stocks. Social media hype drives prices up. Retail investors pile in near the peak. The asset drops. The people who arrived last, driven by greed, absorb the losses. Same pattern, different asset. Every single time throughout financial history. The antidote to greed is a predefined return expectation. Before investing in anything, write down what return you expect and why. If an investment promises dramatically more than the long-term market average, ask why. What does this know that the entire market doesn't? That question, asked honestly, deflates greed faster than anything else. Part 3. Ego. Fear and greed get talked about constantly. Ego almost never does, and yet it may be the most expensive of the three. Ego in finance looks like this. When your investment goes up, you did that. When it goes down, it was the market. Bad luck. The economy. This is called self-attribution bias, and it stops you from learning from your own mistakes. Ego also makes it almost impossible to cut losses. Selling at a loss means admitting you were wrong. So ego keeps you holding long after rational analysis would have you exit. And ego drives status spending. The car you can't afford. The clothes that signal wealth you don't have. In each case, ego overrides logic. The bank account pays the price. The investors who perform best over long periods are almost always the most humble about their own limitations. Part 4. The cycle and the fix. Here's what makes these three dangerous. They feed each other. Greed gets you in. Fear and ego prevent rational exit. Catastrophic loss follows. This cycle has repeated throughout financial history. It's not a market problem. It's a psychology problem. The exit from this cycle is structural, not emotional. 3 rules. Write them before you invest. 1. Maximum position size. Never exceed it regardless of how good the opportunity looks. 2. Exit conditions. Define when you will sell before you buy. 3. Review schedule. Quarterly only, not daily. Structure removes the decision from your emotions. And your calm self is always a better investor than your emotional self. Fear, greed, ego. You cannot eliminate them. No amount of financial education makes you immune, but you can build systems that reduce the power they have over your decisions. And that is the entire difference between building wealth steadily and constantly starting over. In the final episode, how to actually rewire your money brain for good. The neuroscience that proves it's possible, and the habits that make it happen. Subscribe so you don't miss it. And comment below. Fear, greed, or ego? Which one is your biggest enemy? Be honest. This is Funds and Future. See you in the next one.